Time now for an in-depth look at the market news on this Friday, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thank you for joining us today.
Good afternoon.
Well, the monetary supply in Korea we now see as of January in terms of M2 had risen to more than 3.2 quadrillion won. That's around $2.8 trillion. This is according to the Bank of Korea, which says that in the pandemic, small and medium-sized companies in particular have been taking on loans and big companies issuing debt. Tell us about that phenomenon and what do you make of it?
Yes, as you said, Korea's M2 stood at 3.2334 quadrillion won, which is amounted to $2.8 trillion as end of January, which is up by about 1.3 percentage point from a month earlier. And that is YOY number. It's about 10.1% increase. Clearly, this is a trend that you are seeing in a global scale everywhere. If we look at U.S. market, U.S.'s M2 growth rate is at 25%, 26% level. So clearly, Korea is also showing two-digit growth rate of such. This is all because of the COVID-19 implications that the economy is undergoing quite a weak domestic consumption period. So therefore, the banking sector needs to provide additional loans. And obviously, this is actually making the M2 numbers, which is a money supply that counts cash, demand deposit, and other near-term money, and which can be easily converted to cash, obviously is growing at a very rapid pace with the government actually printing additional money. If you look at the monetary policy-wise, Korea's interest rate is at now 0.5%. This is lowest level that we ever seen. U.S. rates being at 0 to 0.25%. Korea is actually slightly higher, but it is probably the lowest that we ever seen. So clearly, the liquidity condition is very ample. Government is trying to do everything possible to boost the economy. Clearly, the monetary policy is very very easy to benefit the overall consumers as well as corporations.
And now turning to stocks, Wall Street was down on Thursday by quite a bit, especially tech. The 10-year Treasury yield surging to above 1.7%. What's going on in the markets, especially in view of the reassurance we seem to get from the Fed yesterday?
Right. If you look at the U.S. market, it's down quite significantly with the interest rate rising rapidly. If you look at the 10-year government bond rate of U.S., it hit 1.75%, which is the highest level that we have seen in a while. And this is a continuation of a 7 straight week of rise that you are seeing. With this high rise of 10-year bond rate, clearly this was quite a negative implication for the U.S. growth stocks, particularly the NASDAQ. NASDAQ was down by over 3%, and also now actually affected quite negatively on the small mid-cap stocks as well, which was down by about 2.9%. All in all, the market did lose quite a bit, of 0.5% for Dow and 1.5% for S&P 500. I think that this is a implication where it's coming because of the futures and option closing date of today, that quite a lot of the retail investors invested heavily on NASDAQ futures and options long, and that created some of these changes or the implications that, volatilities that's causing right now. We think that this volatility will probably dwindle down. Also, the interest rate that you are seeing at 1.7% will probably stabilize in the future. We don't think that inflation pressure is so significant that it will trigger continuation or rise for the 10 years bond rate. We think that it should be able to stabilize around 1.6, 1.7%. The timing for reaching 2% level would probably take at least next 12 months. Because of the inflation pressure is not as strong because of the consumers' labor costs rising is actually quite timid.
And it seems the same issues much on the minds of investors in Korea. The Kospi down today, but again on the Kosdaq, strong buying by individual investors. Tell us about the local market.
Right. Even though U.S. market declined so sharply, the Kospi kind of stayed quite okay, with dropping by about 0.86% only, and also Kosdaq was up about 0.24%. As you heard earlier, that the liquidity condition of Korean market is very strong, ample liquidity affecting positive inflow to the equity market, and domestic retail consumers are continuing to buyer of the Korean equities. Of course, there's a concern about the COVID-19 cases that KDCA reported 463 more new cases, and that number is not going down. It continues to show around a daily basis of over 400 kind of, affecting that the sentiment being continued to be weak. And it seems that that's applied to many other countries, that COVID-19 is not going to go away as quickly as people hope for. And that would result into continued weak domestic consumption numbers. However, though, the export numbers are continued to be very strong. Korea's dependency, or Korea's focus on the semiconductor business and the electric cars and automobiles, we think that these are very good areas where the domestic demand as well as the overseas demands are very strong. So therefore, overall earnings growth rate for Korean Kospi and most of the other companies that relates to the export will show very strong growth rate of earnings this year. We are looking at least 20% plus of the earnings growth this year, and then next year will probably rise by another 15% or so. If this continues, then obviously Korean market is not going to be weak for a long time. We think that after this options and future closing date of U.S. market would start to show rising trend again for U.S. as well as Korean market.
Got it. All right, Mr. Yu, thanks so much for sharing your expertise with us today as always, and have a great weekend.
You too. Thank you very much.